Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we marry technical analysis, looking at charts, past price history, and options analysis. We're going to take a look at the options pricing model and pull out what the implied or forecasted potential move is being priced in as far as in the underlying stock. Now, today, with the moves that we're seeing in the market, which is the securities side is firmly in the red, we wanted to take a look at some of the major market ETFs, give you some perspective so that, hey, with 2 more days left into 2016, I don't want you freaking out. So let's take a look and start with the S&P 500 and the mid-cap 400. It's been a distribution day on both the S&Ps and the mid-caps. They've been sliding below their 2-week lows. So let's start with the spiders. Ticker symbol SPY, trading around 224.53, down about $1.74, around 0.7, almost 0.8%. Now, if we take a look at the options that have 2 days left in trading this week, they're going to expire this Friday, the final trading day of 2016. They're pricing in the potential for this $224 ETF to be either up or down about $1.74. For the next 2 weeks, or week and a half, or in other words, 9 days, they're pricing in the potential for the SPY, the spiders, to be up or down about $3.23. So you have a pretty decent range in this $224.50 ETF. Now, what are the critical levels that we want to keep an eye on? In other words, taking a look at past price history and maybe using some simple moving averages. I focus on the 20, the 50, and the 200 day. With the underlying spiders trading at 224.53, I'm going to watch 224.40. That's the 20-day moving average. That's my trend moving average on the short-term basis. If it breaks 224.40, that means that the short-term trend is in question, and we're going to watch that very closely. Then the next level I'm going to watch is 219.30. That's the 50-day moving average. That's the institutional moving average, and if it breaks there, that means that institutions could get nervous. That also means that the short-term and mid-term trend could shift very quickly, and we're going to watch that level very closely, especially if your core portfolio is long or bullish, especially the S&P 500. Finally, 213.40. That's the 200-day moving average. That's what we're going to watch on the spiders as far as long-term support in this juncture, because the stock is trading at 224.53. That's well above that moving average. Now, taking a look at the mid-cap 400, the MDY is the ticker symbol, is trading at 301.84. It's down about $3.28, or around 1%. Now, the options for the next 2 days are pricing in that this underlying MDY could have a range of between $2.56 either up or down. That means that it could be trading as high as 304, or it could be trading as low as right around 299. Over the next 9 days, it's pricing in the potential of either being up or down about $4.92, which means that the MDY, the mid-cap 400, could be up as high as 306 or down as low as 296. So there's quite a large range. Critical levels that you're going to want to watch here on the mid-caps is going to be 303.70. That's your 20-day trending moving average. With the underlying below that 20-day, we need some momentum to the upside if this trend, the upside, is not going to come into question on a short-term basis. Again, that's your 20-day moving average. The 290.90, that's your 50-day or institutional moving average. A break there is going to definitely put some pressure on these mid-cap stocks. And 277.80 is long-term support. We want to hold that level if we're going to see the upside continue going into 2017. Now we want to take a look at the Dow Jones. Last week, it's basically been in an inside range. Most of the market has been in an inside range. The low is 198.21 on the diamonds. That's the DIA. That's the ETF that tracks the Dow Jones. I know you've been hearing a lot about the industrial and 20,000, that psychological number. But we're going to talk about real numbers, real levels, and look at a real forecast. So the diamonds are trading at 198.24. It's down about 97 cents, or almost 0.5%. The options that are expiring in 2 days are pricing in the potential for the diamonds for the remainder of this week to have a range of being either up 140 or down 140. A 9-day range of being either up 266 or down 266. So basically between now and Friday, you could see the diamonds as high as roughly around 200 or as low as right around 197. So there's a decent range for the next 2 days, and it looks like the pressure is to the downside. On the upside, going into the end of next week, you could see it as high as over 200, so maybe that 201 level, to as low as 196 and some change, 195 and some change. Critical levels that you're going to want to watch to see if this actual short-term trend on the upside continues. 193.60 is going to be the trend level. Break there, that's going to put the current short-term trend in question, but it also is going to be a catalyst potentially for institutions to come in and buy on the dip. 189.70 is going to be a level that's going to need to be held if in fact institutions are going to be buying on the dip, or some traders or investors are going to start buying on the current pullback. It would be positive from the sense of being able to buy at lower prices, but a break of 189.70 could put the overall trend to the upside in question. 182.80 is long-term support. Want to keep that going to keep the current overall long-term trend to the upside in play. Now let's take a look at more higher beta stocks, and specifically we're going to take a look at tech and the NASDAQ. We're going to the QQQs, which is the ETF that tracks the NASDAQ, trading at 120 today, down about 82 cents or around 0.7% to the downside right now. Now the Qs options that are expiring in 2 days are pricing in the potential for a range of either being up or down $1.06. So basically you could see it at 121 or you could see it as low as 119 over the next 2 days. That's the range that's being priced in. For the next 9 days, you see a $2.08 range, so 122 and 118. Critical level that you're going to want to watch to see if this short-term trend to the upside in tech, which has been very strong, is going to hold. 119.05 in the Qs. That's going to be your first short-term trend. A break there is going to put a little bit of an alert on short-term traders. 118.11, that's going to put institutions on note and in alert if we break there. If it holds above 118, watch for some dip buying, especially going into early or mid next week. 113.44 is long-term support on the Qs. And finally, we want to look at that high beta, domestically centric Russell 2000. IWM is the ETF that tracks that. It's trading at 135.03, and it's down to 161 or 1.18%. So this is the biggest laggard of the day. The weekly options that are expiring on Friday are pricing in a range of being either up or down $1.50 for the remainder of this week. So you could see this at basically 136.50 or as low as 133.50. It's also pricing in over the next 9 days a range of roughly $2, specifically 193. But if we round, you're basically looking at a range on the IWM or Russell 2000 ETF of 137 to the upside and as low as 133 to the downside. We're going to want to watch 135.50. If the Russell 2000 and the small caps are going to resume this unbelievable move to the upside, it's going to have to recapture 135.50 if, in fact, the trend is going to start to get some more momentum to the upside. If institutions are going to come on buying, they're going to want to see 128.60 held. As a matter of fact, they'd like to see a dip even a little bit lower than where we're at now to buy at better prices. But 128.60 is going to be that midterm or institutional support level. Holds there, the bulls could be in good footing, especially if it holds going into the new year. And then 120 is long-term support for the Russell 2000 ETF that tracks IWM. All right, folks. So we've married charts. We've taken some option analysis and give you some transparency on some ranges over the next couple of days and next week. So now you have some perspective and you don't have to freak out when you see that the market isn't hitting 20,000 or isn't hitting 5,000. All right. Now, at 4:30 Eastern time, we will be back to wrap up all the action from today's trading day and get ready for the end of the year. We only have 2 more days left, folks. So join us at 4:30 Eastern time for the closing bell. Till then, have a great trading day, and go check out all the videos that we have on past recordings here at MarketStream.live. Take care.